Okay, welcome guys. Welcome. It's a pleasure having you here. The market, hmm, the market is looking interesting, and that's what we're going to be talking about. Without further ado, I'm going to wait for you guys to join and tell us where you're connecting to us from. Tell us how your trading has been so far. I'm going to wait for you to maybe even ask a question or two before we proceed with this live stream. It has rather been an interesting month. Let's put it that way. I'm going to show you something based on another time frame. If you notice, we are always talking about the market from the hourly time frame, but then it's always good for you to check on what is happening with the higher time frames, like the 4 hours, the daily, because they will give you a different perspective of the market. They'll give you a different view of what is happening, right? So I want to say thank you guys for joining us. Thank you for joining us. For the new and the struggling traders in the house, you are welcome. Don't forget, you have any question whatsoever, let us know. This is the time to ask as it is live, and they'll be able to give you a response as quick as possible, right? So the market, if you look at what we have right in front of us, yesterday on the live analysis session that we had, if you remember, yesterday we said something. Yesterday we mentioned that this area price needs to pull back and retest, and that pullback to this area, which happens to be an untested area, right? Because it was formerly an area of support as we discussed. One thing you also notice sooner than later is that trading now becomes repetition. It's the same thing that you are going to be talking about over and over and over and over again. Trading becomes repetitive, right? So we have this area here as support, and then when this massive candle broke out, right, it is yet to pull back. So we're expecting this to pull back, right? But it never did. What did it do a few hours ago? It broke this area here of support. You can see that this is the USD index, the DXY, as you can see from the hourly time frame. Don't forget we said we're going to show you this from different time frames as well, so that you have a different perspective of the market. Yes, so you have a different perspective of why the market is doing what it is doing. We're also going to talk about a bit about trend trading and counter trend trading. We need to, because it is very, very important. Trend trading and counter trend trading, right? Trend trading now is safer. It's safer because you are going with the flow. You're following the flow of the market. But then counter trend trading is what? Counter trend trading, you are going against the flow of the market. I always tell traders, you could be any type of trader that you want. Why? Because even a counter trend trade, a counter trend move can easily turn into a trend move. What goes up must come down eventually, and what goes down must come up eventually. It doesn't mean it's going to take, a complete 180 degrees and wipe out the previous move. No, it could easily be a retracement for a CT move, obviously. And this here was where we're expecting the price to retrace to, meaning that over here, that should have acted as support. We're expecting to get here for entry as resistance. Now I'm going to show you what happened. This is a 1 hour time frame, don't forget. I'm going to be going back to the time frame so that we understand the importance of the time frame as well. So here, price broke out. Now, if you look closely, it is a full-blown downtrend. And the best tool, if you ask me, the best tool for trend trading is the Fibonacci. the best tool for trend trading is the Fibonacci. And you know, we always drop the Fibonacci on our charts from the highs to the lows in this instance, right? So this is the Fibonacci retracement tool. And then if you look over here, which happens to be what? Which happens to be 61.8 retracement. I'm picking out 61.8 retracement because it tallies with this area here of untested resistance. So this will be a good place for price to retrace. I'm still going to iterate that price needs to retrace. Now, price didn't get here, right? It is untested as resistance. What about here? Here being support and then price breaking out in this manner. Here is also untested. So price at least needs to pull back to this area sooner than later. I know the week or the month rather for July has been a heavy bearish one, and that's why we're going to change timeframes now to show you exactly what we're talking about. Because some might be saying, what's going on? What's going on? Remember, there's a statement we always say, when it comes to chess, playing chess, I don't know whether you play chess, but whether it is chess or Monopoly or Scrabble or whatever, you need to be able to, think of what your opponent is going to do. Even if it is Ludo, draft. If I, the buyer, if I buy here, where would the seller like to sell? If I'm the seller and I sell here, where would the buyer like to buy? These are things that you should always consider. Don't say because you are a trend trader, you will not be bothered what the counter trend traders are thinking of. No. So you have to be able to look at the market for what the market really is, right? So this is the hourly time frame, and we said here untested prices to get here, and this ended up being a sideways action. This ended up here. This movement here ended up being sideways action, ended up being ranging market, ended up being an equilibrium market as it moved in this manner before breaking out. So let's clean this up and let's quickly show you this from another time frame. Let's remove the Fibonacci. Most times Fibonacci, for me, it just makes things a bit too colorful for me. I like it when it's as clean and easy on the eyes as this is. So let's do something. Let's quickly pop over to another time frame, right? And we're going to look at the 4 hours time frame. 4 hours time frame. Now, why are we showing the 4 hours time frame? And I'm showing you the 4 hours time frame from the beginning of July. Guys, welcome. If you have any questions, feel free to put them in the comment section. Let's know how your trading is going. Let's know if you have any questions, any instrument that you're looking at. Maybe you took a trade and maybe it's not going too well or whatever the case might be. Let us know. Don't forget also, we always mention some certain things. Stop loss, stop loss, stop loss. Whether you are trend trading or counter trend trading, stop loss is valid. Stop loss is very important. At least get hit and then reevaluate. Conduct a fresh analysis and know whether it was a good trade or not a good trade. Know whether it is time to continue looking at that direction or another direction, right? Okay, so now look at what we have right in front of us. We put this vertical line here, first of all, to demarcate for the month of July, right? So for the month of July, if you look closely here, it's like the first week, second week, and this is the price action for the third week. Right from the very beginning, right, when the market opened for the month of July here, it appreciated and then got to these highs. So from these highs, it has gone all the way down. And as it has been going all the way down, you look at what it has been doing. It has been giving us the high, the lows, right? And then even giving us like the lower highs and then lower lows, right? Moving in this manner. Now, moving in this manner, price did something. It came back. Remember, we're expecting price to come back, to pull back to these areas here, which price never did. because these areas, you notice we're calling them areas. They are areas of support, resistance, and then also supply, demand, right? They are slightly different, but then they're also similar, right? When you look at a movement like this, when price moves in this manner, here is known as the support, while here is known as the demand, right? So once price breaks out and then moves in this manner, price could either go over to, oh, sorry, this is known as support and this is known as supply. Supply, a place of selling, right? So support and then supply. Now that price broke the support, the other side becomes resistance and you're looking forward to selling. You could either sell here at 1 or here at 2. So you could be selling at an area of resistance or selling at an area of supply. And this what normally happens when you put support, resistance, supply, demand on your chart based on price action. Price action is king. It is price action that gave rise to this movement. It is price action that gave rise to this pattern. And that's what every trader, no matter what strategy you are using, you are trading what? You are trading price action. Simple. So look at what happened. Eventually, price did what? It came back to this area of supply. Supply. Here was resistance. And at times you hear me say that I wouldn't like to enter at this resistance because it is too close to where your take profit should be here. So I would never ever enter here, or rather look for an entry area over here at supply. So for those that might have been asking the difference between the support, resistance, supply, demand, is just the area. It's just a different location, but it is still part of the story. So price came back to the supply on the 4 hours time frame, hit this area, and then it's now more or less back to this area here of support, and it now seems to be breaking out. So as it breaks out, here that was resistance, here became support here, and if it breaks out properly, this could not easily now turn to resistance. So we'll have price wanting to come out here for an entry here, or pushing higher back to this area of supply. But one thing is very sure, the price has moved tremendously to the downside. It needs to do a proper pullback. And this is where the fib traders come in. A fib trader could easily draw for the month of July from the highs over here all the way to the present lows here. And a fib trader could now be waiting for price to pull back to the area of 38.2, 50, or 61.8. So if you ask me, this is what you call oversold on the US dollar, oversold, right? At least for the month of July, because now we're looking at the price action based on the month of July. You could also back test this and see how it is on the eyes. I repeat, you could also back test this and see how it is on the eyes. You would understand better that looking at the market from different time frames, from different perspective, whether from the monthly perspective, which is what we're doing here, or the weekly, or you could even do on the daily. If you're looking at it from the daily, then you're looking at it as a scalper stroke intraday trading. If you're looking at it from like the weekly, then you are now become gradually a swing trader because you've crossed over from trading within that day, within that day, scalping or intraday within that day. You have now crossed over to more than a day, which is swing. By the time you're looking at it from the monthly like this, of course, it's a swing as well, right? And you could also look at it from what? For the year, right? I hope you understand what we just said. If you have any questions on that, feel free to ask. Guys, let us know what instrument you are trading, what instrument you normally trade. Are you in any trade now? How's the market looking like for you? I'm also going to clean this up, and then we're going to come back and talk about Euro USD And if you have any instrument, you look at them, you look at pound USD, because obviously they seem to be moving alike, right? Don't forget, yesterday we also checked the calendar. One of the major things to do before you start looking at the technicals is check the calendar. And today being July 17th, Wednesday, the only news we had was for pounds, right? We didn't have any other news for the USD. It is tomorrow by 1:30 p.m. UK time, Nigerian time, that we have for the US dollar unemployment claims. So we should also have some volatility here, right? But on the long run, if not the rest of this week, if not this week, maybe next week, we should have some decent pullbacks where the counter trend traders should easily jump in. Now, mind you, these counter trend traders, this is where they tend to fade their positions. This is where some of them, depending on their trading style, this is where they could start to implement what is known as martingale. I wouldn't like to talk about this because it is rather a very dangerous trading style. The concept is having to add to your losing positions. Very dangerous, right? So, with that said, how is trading for you guys? Let's know in the comment section. And then we are going to cross over now to Euro USD. Let's have a look at the Euro USD and find out what Euro USD has been doing. Don't forget, Euro USD is always in the opposite direction. I repeat, it's always in the opposite direction to what the USD index, the DXY, is doing. Let me just pop the DXY real quick. You can see the DXY has been a downtrend, right? And then if we pop the Euro USD, it is what? An uptrend. And I always tell traders, if I were to pick just one instrument, one currency pair to trade, strictly one currency pair, it will be the Euro USD. Why? Because I have the USD, which is a major driving force for the major currency pairs, gold and so on. I have the view and I can analyze what is happening, and then obviously I can use that to trade my Euro USD, which is what we have in front of us. Now, mind you, by the way, we were able to get a trade on Euro USD and Pound USD. But the only thing for me now is that I'm going to show you the trade I got. The only thing for me with this trade I'm not too comfortable with is that it's like you are buying at the highs, right? If you look at what we have in front of us, this here is the 30 minutes time frame, not too far from the 1 hour. So from this 30 minutes time frame, you can see we have a massive, massive uptrend, right? This is GBP USD. It's the same movement with the Euro USD, and I'm going to show you. You can see we had a massive, massive uptrend. I would rather like a deeper pullback to maybe this area here or this area here for price to bounce as a trend trader, right? And not to be entering as a trend trader when it's too close to the highs, right? The reason why we did this was also because of the higher time perspective and the strength that we're seeing based on the market. Remember, we said we're expecting it to drop, but the market changed its mind for the Euro USD and it's pushing higher. So this one here, you can see where the stop loss is. I have quickly moved my stop loss a bit more, tighten it up the more, because I am not just comfortable buying where we entered, but looking at the strength of the market as of today, we noticed that the USD, the DXY was going to fall, meaning that this Euro USD was going to appreciate. But trust me, if we find an opportunity to reverse this trade, we will, without blinking. We will reverse it as a CT trade and then hold it and see whether price will pull back to these areas of maybe like 38.2, 50, or 61.8 on the Fibonacci retracement levels. This was the GBP USD. And of course, we have also the Euro USD, as you can see. The Euro USD, more or less similar story, right? You can see price pushed higher in this manner from this point here. We have some areas that price should retrace to, right? And if you look at it just by keeping an eyeball on it, you notice that these areas here should probably be like 50 or 61.8 areas if you add the confluence from the Fibonacci retracement tool, which for me happens to be the best trend trading tool out there, right? Trend trading, counter trend trading, once again, I repeat, trend trading appears to be safer because you are going in the flow of the smart money. Let's put it that way. But at the same time, it doesn't mean that counter trend trading is wrong, is bad. You could either be a trend trader or a counter trend trader, or you could be a mixture, a combination of the two, based on how you're looking at the market, based on how comfortable you are entering the market, based on your risk as well, based on a whole lot of parameters. It's up to you at the end of the day. So once you're comfortable with your trading style, what do? You simply do what? Trade. You simply pull the trigger. And as you're pulling the trigger, you accept the outcome. I repeat, as you're pulling the trigger, you accept the outcome. That is a trader for you. Guys, let's know if you want us to analyze any instrument, as we'll be rounding up soon. Don't forget, we try as much as possible not to take way too much of our time. Here is the Euro USD. If you look at the GBP USD, right, you can also see from the sideways action we have over here from the ranging market. From this here, price broke out. So ideally, you would be expecting that this area would act as support. Ideally, you're expecting price to come back here, pull back, and use here to push higher to these highs. That's what you'd be expecting on the GBP USD. I'm just saying, for me, I'm not really a big fan of entering, as a counter trend. That's why we always add a Fibonacci retracement as a form of confluence. Because if we're going to add a Fibonacci from the lows here to the highs over here, you notice that you wanting to enter here, it doesn't have confluence with any of these key levels, 38.2, 50, or 61.8. It doesn't have. So I would not enter here because of the reward. I rather wait for price to have confluence with either of these places. And I can see that the 61.8 has confluence, is the closest to this area here of untested support. It might look like a long way down, but here is where I would like to jump in this market, this area, right? Don't forget, I'm going to iterate this. The price needs to pull back. It needs to drop. And it needs to drop heavily sooner or later. That's my own view. And I'm saying this live because from my own little experience of the market, it is long overdue for a pullback, at least for this month. At least for this month. So let's see how it plays out tomorrow, right? Don't forget, always look at the two sides of the market. Always look at the two sides of the market, right? So this is GBP USD. Let's look at the gold XAU USD. You can see the same thing, uptrend where it is now. We even have a high over here. This has been established as an area of resistance, right? So maybe price hitting this area to test as a double top could be a good one to sell as what? As a CT trader, as a counter trend trader. If you are a trend trader, you should be looking forward to these areas that we have mapped out here, these areas here. And then to pick the best one for you, right, we add the best trading tool for trend trading, and we put the Fibonacci from the lows here to the highs here, right? And then when we do that, we look for confluence. You can see we have some confluence at about 38.2 with this area here, and some confluence at 61.8 in this area here. So a pullback either here, not even here, a pullback here, I'll call this number 1, or a pullback here, number 2, will be ideal for me personally. Start looking for buying opportunities in this shiny metal. But presently, it's at the area of the counter trend traders. Always know where price is, which is the area. Always know how price is going to react. Meaning that you must wait for the candlestick behaviors at that particular area. So wait for the reaction at that area, those areas, and then wait for your trigger. Assuming you want to enter here as a counter trend trader, look for a nice pin bar, a nice bearish pin bar, a nice bearish hammer that pokes out of this area here. The poking out I like because, and especially if the wick here is to the upside is long, it shows a strong bearish pin bar, a strong bearish hammer. When this happens, you'll be sure that it has most likely taken out the stop loss of those above here, right? Which some might call stop hunting. I really don't know. But it's always preferable when you have a candle like this in this manner for selling, for going against the trend CT, when it pokes out of that area here of resistance, this is resistance, right? It pokes out here, and then before you know it, gives off this nice candle formation. As your trigger, you jump in and sell it at least to this area here. So you could call this TP1, TP2, TP3. But then don't forget also where the buyers would also be considering to jump into the market to take it back up, right? So always know the type of trader that you are. Are you a trend trader? Are you a counter trend trader? Are you a combination of the two? Even based on your trading style. Trading style is also very important. When it comes to trading style, are you trading as a scalper? Are you trading as an intraday trader? Are you trading as a swing trader? Are you trading as a position trader? No matter the trading style that you are taking, that you are using, right, it's important that you understand the time frames because they are all majorly attached to some set of time frames. A scalper, you will not say a scalper, looking at the monthly, weekly time frames. A scalper would usually be placing that trade, will not place a trade from the monthly, weekly, higher time frames. A scalper will place a trade from the lower time frames, like 1 minute, 5 minutes, or even 15 minutes. And that is what? That is a scalper for you, right? So we must understand the trading style, how to approach the market the proper way. And of course, trust me, gradually it will start to make sense. If I were to tell the newbie traders in the house, right? If I were to give you this advice, I'll tell you, do not be in a hurry for the money. What you should be in a hurry for is understanding the market, how to read and understand the market, understand the price, and then start to test it. Because it is only when you understand what is happening that you can take advantage of it. You can start trading now as a newbie and start making money without even knowing what you're doing. Trust me, that way is going to haunt you. It is going to haunt you. Understand everything. Understand from price action. Don't forget, we always say start with the fundamentals, and we always show you the calendar from Forex Factory. Start there before you do any other thing, before you check the charts that we're looking at now. Why are you doing that? Because you want to be aware, is there going to be some volatility today that can shake the market? That volatility is where, you use as a gauge to know whether to trade or whether not to trade. Imagine you want to enter a commercial vehicle today, right? And then you look at the driver, you look at the person that's going to be driving, and it looks like this person has probably taken drugs, has been drinking, and so on. Meaning that what? His driving is going to be what? His driving is going to be a bit crazy. It's going to be a bit on the volatile side. So what do? You easily decide not to go with that driver. You have one life. I wish traders could look at, trading in this kind of aspect, using this example, right? We used to enter that vehicle. Most times people will say no because they'll be like, oh, I just have one life. Yes, you have one life. That is why you did what? You took, a decision. You analyzed the situation and you took a decision. A no trade is also a decision. You don't have to try to be in every trade to call yourself a trader, right? So make sure you understand. The understanding of the market is number one before you start thinking of how will I now make $1 million? Once you understand the market, you're flowing with the market. Trust me, that $1 million would eventually come. It doesn't mean it's going to be a day or a month or a year, but gradually your account balance will start to grow as soon as your trading starts to what? As soon as your trading starts to grow, starts to improve, right? Based on the understanding of the market, the understanding of price. Because whether we like it or not, it is price that we are trading. We're trading the price of this currency pair. We're trading the price of this crypto. We're trading the price of this commodity and so on. Price, price, price. And that's why I will keep on saying that price action is king. The behavior of price is king. The direction of price is king. The trend of price is king. Now, guys, we are going to be rounding up now. We do hope that this live has been a bit helpful and you guys have been able to read and understand the market a bit better. I repeat, we do hope that you have been able to read and understand the market a bit better because trust me, this is going to help you to improve. Don't forget, improvement before money. You make money before improving, you easily end up losing that money. But if you are losing while you are improving, you know that what you are losing has been improved and you're not losing the whole account. You're not losing big chunks of your account, but rather you have improved the losses by minimizing them. And then before you know it, you start to grow the account, start to make money. At times, the best way to attack is to defend. Okay, so with that said, I want to say thank you guys for joining. It's just about 30 minutes that we've been running this. I will continue to run this so it is not too lengthy for you guys to watch this on a replay so that you could always look for trade opportunities that are still very much available on a daily basis. Okay, so thank you guys. Thank you for joining us. It has indeed been a good one. Feel free to reach out to us in the Telegram community if you have any questions. If you found this live helpful, give it a thumbs up, watch it again, share, and don't forget to subscribe to the channel. Okay, thank you guys, and goodbye for now. Cheers.